Hi everyone, my name is Rajita. I'm lecturer in commerce and working at Government Degree College, Mortad. The topic is payment banks. So, payment banks is a new model in banks conceptualized by RBI. So, this means people can make transactions from anywhere. Like before earlier days, if a person or customer has to make any transaction, he has to go to the bank. But here, the payment banks facilitate the customer to make bank transactions from anywhere. So this is the new model which is introduced by RBI in India. So these banks can accept restricted deposits, but not these banks doesn't have the right to sanction loan, but they can operate current and saving accounts. Means the customer, most probably the bank transaction can happen on current account and savings account. So these two accounts are more important and more people use these accounts. So the payment bank will operate with these two accounts. So the customer, if any customer having current account, can use the payment bank option. Payment banks can use ATMs and debit cards to make transactions. So by using cards, they can draw and they can deposit amount into accounts. So there are different types of payment banks in India. The payment bank concept was introduced in 2014. There are a lot of applications for establishing and starting payment banks. So from that, 44 people 44 companies applied for payment bank model. From that, some people have started payment bank. From that, Airtel Payment Bank is the first payment bank which is started in India in 2017. The Airtel Payment Bank was started by Bharati Airtel in India. Now this is the first and who are operating more than 3 years without any flaws. So the most of the people are using Airtel payment bank model, and there are also some other payment banks like Paytm, which is approved by government. So this is the most used payment bank app, and India Post has also started this payment bank model, and Jio Payment is there, another payment bank, and Aditya Birla Idea Payment Bank. These are the examples for payment banks in India. So universal banking, this is the concept. So the concept lies on the financial services like investment banking, commercial banking, development banking. So this is the blanket of financial services. So it will provide all kind of financial services. So the universal banking makes the customer to use or to acquire different kind of financial services from different banks. So the universal banking gives the facility for the customers to make use of all kind of financial services. So in this system, universal banking system, bank will provide financial services, a bucket of financial services like investment banking, commercial banking, development banking, insurance, financial instruments and merchant banking, mutual fund. All kind of financial services are provided by banks in the model of universal banking. This is also called as a superstore. The superstore means availability of all financial services. So in one word we can, if we had to say that is called as superstore. And we have some advantages with universal banking. So in that, increased diversions and increased profitability. So if the financial services So with the availability of financial services, the diversion and profitability can be increased. Diversion means the people can choose more than one financial services at a time to cover the losses. With that diversion, losses can be covered as same the profitability can be increased because of the diversion. If one person in one financial services there is a profit, and if the another financial services there is a less profit, so the profitability, the maximization of profitability is possible with the universal banking. There is another advantage, that is better resource utilization. So every bank will try to provide all kind of financial services. So with that, the resources will be used. Better utilization of resources is possible, and value added services. So the services can provide a maximum better and best way to the customers, as well as the best way to the banks also. So here in our India, RBI has some guidelines towards universal banking, that is, any immovable property acquired by the financial institution would have to be disposed of in 7 years' time. If any bank is acquiring, when the financial services are issuing to the customer, so if in that return security purpose, if they are acquiring immovable property, that should be disposed in 7 years of time, because the investment can be made, or investment can be given for that customer up to that time. If there is any another subsidiary that is engaged in a universal banking, so the subsidiary is not permitted to use the model of universal banking. So the subsidiary has to be delinked, because the bank has to do on his own. The bank cannot be subsidiary. Any financial institution cannot be subsidiary for any other banks or financial institutions. So each and every bank, if any bank or if any financial institutions want to do universal banking, they have to do on their own. So they should not be a subsidiary for any other banks or for any other institution. If there is those kind of activities are going on, as soon as possible they have to be delinked with the banks or financial institutions. There is an other guideline given by the RBI, that is, financial institution require obtaining license for universal banking under Banking Regulation Act. So if any bank or financial institution going to start the universal banking system or universal banking concept, so they have to get the license first, then they can start the business. So the license can be granted under Banking Regulation Act. So there is another guideline which is related to universal banking, that is, if financial institutions or banks using universal banking concept, so every year they have to publish the annual financial reports to the Banking Regulation Act and to the public. So these are the guidelines which are issued by RBI towards the universal banking. The universal banking concept is introduced in 1991 in India, but the importance was gained in 2000 years. So in 2000 years there are lot different kind of universal banking concepts began, like merchant banking, factoring, venture capital. So these concepts were already there, but the importance was gained by these concepts in 2000s. So this is universal banking.